Looking ahead, we see risks of further strength in the consumer price index in early 2020, which could stoke even stronger demand for gold. Yes, I agree. This inflation is not, in my opinion, temporary. You're printing so much money, you're going to create inflation, and that's what we're seeing. It's not rocket science. Whilst also raising its price outlook from 1,700 to 1,800 ounces in the next year's first quarter. Similarly, commodity strategists at ANZ, Australian New Zealand Banking Group, stated on November 16 that high inflation expectations contributed to more gold bullishness. Prices have since reversed course, remaining below 1,800 per ounce from the final week of November onward. This can at least partly be explained by the renomination of Jerome Powell as chair of the Board of Governors of the Federal Reserve System, which brings renewed expectations of a normalization of monetary policy through hiking interest rates and or cutting asset purchases sooner than initially anticipated. Okay, yes. So finish the thought. The gold market had bet on Lael Brainard to be the next Fed chair, as she is considered to be more dovish than Powell in terms of monetary policy for stimulating the economy longer. Julius Baer's analyst Carsten Menk told Reuters, therefore, the breach of the 1800 level could put further selling pressure on gold. Just trying to make sense of the cause and effect that they're identifying here. Okay. By week ending November 26th, however, money markets were again pushing back the timing of the Fed's increase in rates from June 2020 to September 2022. By week ending November 26th, however, money markets were again pushing back the timing of the Fed's first increase in rates from June 2022 to September 2022, as well as predicting no additional rate hikes to come sooner than 2023 at the earliest. As such, bond yields fell considerably in late November. This increasingly dovish prediction, moreover, suggests that investors will continue to stay in gold for the meantime. Indeed, Ross Norman, an independent analyst, recently told Reuters that it's too early to write off gold. He further explained, inflation still has many legs to run, and there are COVID-19 restrictions in Europe once again. But the onus is on the bulls to prove their case and garner support, failing which the metal could drift lower again. I said we don't want to get caught in a novel. It's indeed isn't it? I'm just going to skip through this article. In the meantime, all eyes are firmly fixed on determining just how much damage Omicron will ultimately inflict on the world, should it have a similarly restrictive impact as that of previous variants such as Delta. It is reasonable to assume that investors will flock once more towards the safety of gold. But in the long run, as vaccinations against COVID-19 continue around the world, as the global economy normalizes, albeit at varying paces in different regions, and as interest rates embark on an upward trajectory at some point in the future, the price elevation that gold has enjoyed for almost 2 years may well come to an end next year. All right. Price elevation that gold has enjoyed. Well, it didn't enjoy elevation this year. So, all right. Hope you enjoyed that one. I had to fly through that a little bit. Greg Silverman, come invest with us at this URL over here. Greg Silverman out for now.